Next, question number 95. All-in-one store is a retail chain of departmental store having presence in almost all metro cities across India. Both exempted as well as taxable goods are sold in such stores. The stores operate in rented premises. All-in-one stores pay GST under regular scheme. In Mumbai, the store operates in a rented complex, a part of which is used by the owner of the store for personal residential purpose. Now, actually, this is a question related to Rule 42. In Rule 42, we need to remember the format. What is that? First, T refers to the total ITC on all inward supplies, correct? Whatever is the total ITC that you are availing, that is total GST paid. Total GST paid on all inward supplies will be T minus T1, T2, T3. So T1 is what? Inward supply is used for non-business purpose. You will not take that credit. And T2, inward supplies used for exempted outward supply. That also you will not take credit. T3 is blocked credit. So T1, inward supply used for non-business. T2, inward supply used for exempted. T3, blocked credit. What is the remaining? C1. So that C1 is the credit that you will avail. Okay, availment of ITC. Availment of ITC. So this credit you will take into the electronic cash, that is electronic credit ledger through return. So in GSTR 3B we have something called as availment of ITC and reversal of ITC. So this amount we will be taking in the availment. Okay. Now from this you need to take out T4. T4 is what? So T4 is exclusively for taxable or business purpose. That is T4. Now the balance that you get will be common credit. Now this common credit will undergo reversal. So common credit attributable to exempted purpose. How much? C2 into E by F. What is E by F? Exempted to total. First we will take the credit and then we will reverse the credit. Common credit attributable to exempted supply. Minus T2. Common credit attributable to non-business purpose. If you know how much is exactly for business and non-business, that you will segregate in this stage itself. If you don't know, then it will travel to common credit and here you will take C2 into 5%. So from the common credit, if you take out D1, D2, the remaining is the C3, eligible common credit. Eligible common credit. Okay, eligible common credit. Now, we need to just ensure that we stick on to this format so that we will be arriving at the answer. Okay. Yes? D2 is common credit attributable to non-business purpose. Common credit attributable to non-business purpose. That is, partly you will be using for business and partly you will be using for non-business. How much of the common credit is attributable to non-business purpose is given in D2. So that if you know, for example, 1/3 is for non-business, 2/3 is for business, like that if you know, you can segregate here. So 1/3 is for non-business, that you will put it in T1 and remaining 2/3 is for business, that you will put it in T4. If you could not segregate there, then it will come into this common credit and the entire common credit into 5% we will reverse on account of non-business purpose. If you could not identify that at the T1, T2, T3, T4 stage itself. Okay. Now, so we need to stick to this format and we need to arrive at the answer. So look into this. Aggregate value of items sold in the store. Aggregate value of items sold in the store. So taxable items, exempted items and not leviable to GST. So these two are exempted. So therefore, on this no GST payable. So this is outward supply. Na? Then Mumbai store transfers to another all-in-one store located in Goa certain taxable items for the purpose of distributing the same as free samples. The value declared in the invoice for such items is 5 lakhs. Such items are sold in the Mumbai store at rupees 8 lakhs. Now in this case, when it is sold in a Mumbai store at rupees 8 lakhs, so then, so this will be exempted supply or taxable supply. So these are taxable items. So now, listen, where are they located? So transfers to another all-in-one store located in Goa. Where are they located? In Mumbai. So Mumbai to Goa, transaction between distinct persons. So the value will be determined under Rule 28. Rule 28, the value will be determined between related persons and distinct persons. We will be taking open market value. What is the open market value? So don't take the 5 lakhs. So take the open market value 8 lakhs. But sir, if recipient is eligible for full ITC, so we will take transaction value deemed as open market value. Like that one concept is there, can't we apply that here? No. Because the Goa unit is getting that from the Mumbai unit, not for sale, for distributing as free samples. That is, that distribution of free samples is not a supply, which means they cannot take ITC on inward supply. Okay. So as they cannot take ITC on inward supply, which means they are not eligible for full ITC. So open market value is not deemed to be transaction value. So then what should be taken? We need to take open market value 8 lakhs. Now if you see, what is the exempted turnover divided by total turnover? The total turnover you see 42 lakhs plus 12 lakhs plus 3 lakhs plus 8 lakhs, that will be 65 lakhs. Okay. Whereas exempted turnover, if you see 15 lakhs. 15 lakhs is the exempted turnover. Okay. 42 plus 12 plus 3 plus 8, 65 will be total. And the exempted will be 12 plus 3, 15. So from this data, we got exempted to total ratio. Okay. Now, thereafter they have given the purchase data. Aggregate value of items procured for being sold in the state, in the store. Taxable items 55 lakhs. So we are purchasing taxable items. On the taxable items, whether we would have paid GST? Yes. So therefore, here look into this. What is the GST rate? What is the GST rate that we need to understand? So GST rate, wherever applicable, GST under RCM is 5% and other cases it is 18%. So therefore, we need to take 18%. So this is not RCM. So on 55 lakhs, how much GST I would have paid? 18%, that will be 9,90,000. So that is GST paid on inward supply. GST paid on inward supply 9,90,000. 9,90,000 GST paid on inward supply. Okay. And where it will come? Inward supply exclusive used for taxable items. So therefore it will be coming in T4. It will be coming in T4 because exclusively used for taxable. So it will be coming in T4. First you will take that in T. Thereafter it will be coming in T4. Okay. Then next number. Items exempted by notification. First of all, we would not have paid GST. So then items not liable to GST, we would not have paid GST. So leave it. So these two are irrelevant. Then freight paid to GTA for inward transportation of taxable items. Actually, we need to pay this GST under RCM because 5% rate is given in the question, which means that so RCM will be applicable. If GTA is paying, the rate of GST will be 12%. So now on this 1 lakh GST paid, yes. How much GST paid on 1 lakh? 5%. That is 5,000. 5,000 is the GST paid. And it is used for what purpose? Transportation of taxable items. Means that inward supply is used for taxable outward supply. So therefore it will be coming in T4. Then next. Freight paid to GTA for inward transportation of exempted items. So 80,000 into 5%. Sir, exempted items. See, when the goods are exempted, but its transportation freight will be chargeable to GST na. So therefore 80,000 into 5%, 4,000. So that 4,000 rupees will be taken. And then next one part. And this 4,000 will come where? This 4,000 is inward supply used for exempted. So therefore it will be coming in T2. It will be coming in T2. Then freight paid to GTA for inward transportation of non-taxable items, 20,000. So 20,000 GST rate is how much? 5%. So 20,000 into 5%, 1,000. So first you will take it in T and inward supply for transporting what? Exempted non-taxable items. So that will be coming in T2. Then thereafter, monthly rent payable for the complex. Monthly rent payable for the complex, how much? 5,50,000. 1/3 of the total space available is used for personal residential purpose. So 1/3, we know that it is used for non-business purpose. Okay. First, 5,50,000 into 18%. That is 5,50,000 into 18%, 99,000. Okay, 99,000. First 99,000 we will take as GST paid. Now out of this 99,000, 1/3 is used for non-business purpose. So therefore that we will keep 99,000 into 1/3. We will keep under non-business 33,000. Okay. Now remaining is used for business, but in that we are selling both taxable and exempted. In that we are selling both taxable and exempted. Clear? You understood? So as we are selling both taxable and exempted, so therefore don't put it under T4. Why we should not put it under T4? Reason simple. So it is used for both taxable and exempted purpose due to that reason. Okay. So then what is it we need to do in that case? So leave it. Automatically it comes into the common credit. You don't put it under taxable and business purpose because so 1/3 is for non-business that you have taken out. Remaining 2/3 is for business purpose. So that 2/3 which you are using for business purpose, in that same place we are selling taxable goods as well as exempted goods. So due to that reason, okay. So then leave it. Don't put it. Don't classify it anywhere. Then, so after that, what's the next one? Activity of packing the items and putting the label of the store along with the sale price has been outsourced. Amount paid for packing all the items is 2,50,000. So the 2,50,000 into 18%, 45,000 GST paid, but we cannot segregate it into anywhere. Why? All items, taxable items as well as exempt items, means the common credit. Then salary paid to the regular staff. First of all, GST not paid on salary. Why salary? GST not paid. Salary is excluded from supply. So employee to employer in the course of employment, no GST. So then GST paid on inputs used for personal purpose. So first we will put it under T, and personal purpose is actually blocked credit. Okay. So therefore what we need to do, first take 5,000 under T, then put it under block credit 5,000. Then next, GST paid on rent-a-cab service availed for transportation of employees, which is not obligatory under any law. So this GST paid on rent-a-cab service is also same treatment. So whatever GST that we pay is a blocked credit. First put it under GST paid 4,000. So under 4,000 we will add, and even if we will be adding it under blocked credit. Then GST paid on items given as free samples, that is also block credit. If goods are purchased which are lost, destroyed, written off or disposed of by way of gift or free samples, so then on that also there is no GST, that is ITC not available. First we are paying GST. How much GST? 4,000 we are paying, and that will also come under blocked credit. Okay. Then all these numbers are over. Now you are required to compute the following. First let's prepare this totals. So what is that? First T you take 9,90,000 plus 5,000 plus 4,000 plus 1,000 plus 99,000 plus 45,000 plus 5,000 plus 4,000 plus 4,000. So that will be 11,57,000 is T. Minus T1 33,000, T2 5,000, T3 that is so 8 plus 5 13,000. Now what is the credit available? 11,57,000 minus 33,000 minus 5,000 minus 13,000. That will be 11 lakh 6,000. 11 lakh 6,000 is the credit that you will take. And after taking this credit 11 lakh 6,000, so how much is exclusively for taxable? So this is the credit availed. This is the credit availed. Then how much is this exclusively for taxable? 9,95,000. Then from this 9,95,000, if you take out 1,11,000 is the common credit. Now common credit we are using for both taxable and exempted. So 1,11,000 into exempted to total ratio. Exempted to total ratio already we know 15 divided by 65. So therefore 15 divided by 65 we will take into 15 divided by 65. So 25,615.38. So 25,615. Now D2 nothing. Why? So whatever is the common credit, we don't have anything used for partly business, partly non-business that we have segregated at the T1, T2, T3, T4 stage itself. So which means there won't be anything now. There are no inward supplies which are used partly for business, partly for non-business now in this. Already that segregation over. So don't do anything now. Now eligible common ITC will be 25,000, 1,11,000 minus 25,615, 85,385 will be taken as the eligible common ITC. Now we finish now. So let's try to understand what are the questions that they are asking. Input tax credit credited to electronic credit ledger. What is the input tax credit credited to electronic credit ledger? 11,06,000. That is the answer. 11,06,000 is the input tax credited to electronic credit ledger. Okay. So input tax credit credited to electronic credit ledger will be 11,06,000. Done here. 1 second. Then, so T minus T1, T2, T3. So that's where we will be getting that answer we need to write. And next, what is the next question? Common credit. What is the common credit? 1,11,000. Correct? The common credit is 1,11,000. So that we need to enter the common credit as 1,11,000. Okay. The common credit is 1,11,000. Are you understanding here? 11,06,000 will be the credit availed. 1,11,000 will be the common credit. We got that. And what is the next question? Out of this common credit, how much is eligible ITC attributable towards exempted out of common credit? Exempted out of common credit. So that 25,615. 25,615. So out of this, how much is attributable to exempted common credit? 25,615. Then next question. Next question is eligible ITC out of common credit. That also we computed. What is that eligible ITC out of common credit? So that is 85,385. Now the last question, the last part of this question, net GST payable from electronic cash ledger. First, what is the gross liability? We have FCM liability and RCM liability. What is the gross liability that we have? What is the gross liability that we have? First, if you see the gross liability here, so first see the turnover. What is the taxable turnover? The taxable turnover will be 42 plus 8, 50 lakhs. 50 lakhs into 18%, 9 lakhs will be the FCM liability. RCM liability is only with respect to GTA services. So what is that GTA services? 3 GTA RCM, 1 lakh and 80,000 and 20,000, 2 lakhs. 2 lakhs into 5%, that will be 10,000 RCM liability. Then input tax credit. First, what is the ITC availed? ITC utilized. ITC utilized. So that is outer column. ITC availed. How much is the ITC availed? The ITC availed here is, so 11,06,000 ITC availed. From that 11,06,000 minus ITC reversed. How much is the ITC reversed? 25,615. Remaining ITC is available for utilization. So 11 lakhs 6,000 minus 25,615 only we need to reverse. So 10 lakh 80,385. Can we use that? Yes. 9 lakh we will adjust. 9 lakhs we will adjust. Here we cannot use because input tax credit balance cannot be used for payment of RCM liability. Even though we have that much of credit, but we cannot use it for payment of RCM liability. Which means the FCM liability will become 0 and RCM liability will be 10,000. And what is the ITC carried forward? ITC carried forward, if you see, 10,80,385, 9 lakhs only we have used. So therefore, the remaining amount, that is 1,80,385, 1,80,385 will be ITC carried forward. So the net liability, if you see, only 10,000. The net ITC, if you see, that is only 10,000 rupees. That is RCM liability, because there is excess credit available for payment of FCM liability, but the credit cannot be used for payment of RCM liability, that we need to pay by cash, no other. So this is the answer with respect to Rule 42. Any doubt in this here? Again, Rule 42 is a very good area, so they can test that. So this all-in-one question is one study material question only on application of Rule 42. Just if you stick on to this format, it will be easy. You will be able to arrive at the answer.